flood of news following FTX's collapse continued apace this weekend. Binance announced it would form an industry recovery fund. Crypto.com's attempt to prove its solvency raised more questions than it answered. And FTX suffered what may be the fourth largest hack in crypto history. Let's dive in. A quick shout out to BitRefill. Thanks for sponsoring this video. We'll have more on them later. Since the spectacular collapse of FTX, folks have wondered what other projects the bankrupt crypto exchange will drag down with it. After all, it invested in dozens of companies. So far, we're already seeing collateral damage among crypto companies, with BlockFi halting withdrawals. Changpeng Zhao, the CEO of Binance, the world's largest crypto exchange, announced early Monday that he would establish an industry recovery fund to, quote, help projects who are otherwise strong but in a liquidity crisis. Zhao, or CZ as most call him, has said little else about the fund, but it doesn't sound like he's going to be handing out free money. On a live broadcast on Twitter Monday morning New York time, he said now is a great time to do this because, and I quote, most of those projects' valuations are much more reasonable than they were a year ago. This fund will be limited to, in CZ's words, strong projects with talented teams and interesting products. Depending on the number of projects that apply, we could see Binance own a non-negligible stake in a broad swath of crypto. Some have already taken to calling Binance crypto's central bank, all of which raises the question, how much power is the industry comfortable allowing one man to amass? At the moment, CZ has the air of a benevolent dictator. It was his announcement Binance would sell its stake in FTT that led to FTX's downfall. He's called on the remaining centralized exchanges to provide proof of their reserves. And many tripped over themselves to announce that they would do just that, including Crypto.com. But its attempt at winning favor with the crypto community may be backfiring, as blockchain sleuths question a bevy of suspicious transfers between Crypto.com and other exchanges. Before we get into this though, a quick word from our sponsor. BitRefill allows you to shop online and physically without banks, converting your crypto into merchant balance directly without any sign up. It offers more than 5,000 gift card options in 180 countries, and in the USA, you can now pay bills like your mortgage or credit card. Creating a BitRefill account is not required, but it only takes 1 minute and you can get 1% back in rewards. Back to our story. On October 21st, Crypto.com sent 320,000 ETH to Gate.io, another centralized exchange, 1 week before Gate published its latest proof of reserves audit. The Ether was sent back to Crypto.com between October 26th and October 28th, arousing suspicions that the two exchanges were passing the ETH between them to inflate the reserves for the audits. The CEO, Chris Marzalik, said it was a mistake. The money was supposed to go to cold storage. And don't worry, Gate had returned the money in question. Gate also addressed the transactions, noting that the snapshot used to inform its proof of reserves audit had been taken on October 19th. That didn't satisfy markets. Crypto.com's CRO token lost a quarter of its value over the past 24 hours, according to CoinGecko. But that wasn't the craziest thing that happened this weekend. Not by a long shot. Friday night, as people were settling into the weekend and thinking, well, at least it couldn't get any worse, it did. After FTX halted withdrawals, after Binance pulled out of its deal to rescue FTX and its customers, after dogged journalists reported FTX CEO Sam Bankman-Fried had built a back door in the FTX system to transfer $10 billion to its sister company Alameda Research, which itself had lost millions as the market soured earlier this year, after FTX filed for bankruptcy, ensuring customers with funds trapped there would likely receive pennies on the dollar, if anything. After all that, it got worse. FTX was hacked Friday night, and the thief or thieves made off with a lot of money. They stole an estimated $477 million, according to crypto forensics firm Elliptic. That would place the hack fourth on the list of the industry's largest, according to Rect's Hack leaderboard. Around 9 p.m. Friday, on-chain data analysts noted some funny stuff happening over at FTX. Some wondered aloud on social media whether this was the beginning of bankruptcy proceedings, the consolidation of funds that would eventually be distributed among creditors. But at this hour, on a Friday night, with transactions incurring huge amounts of slippage and one of the recipient addresses titled "fuck FTX and SBF.eth," observers quickly concluded this was a hack, which was confirmed shortly thereafter by FTX's general counsel, Ryan Miller, and an administrator in the FTX Telegram chat. FTX was investigating abnormalities with wallet movements, Miller said. And the admin in the FTX Telegram chat, meanwhile, was less circumspect. FTX has been hacked. All funds seem to be gone, they wrote, adding, FTX apps are malware, delete them, don't go on FTX site as it might download Trojans. Yes, you read that right. As the hack was ongoing and FTX was hemorrhaging what remained of users' money, those same users were also served malware via the app downloaded on their mobile phones and the company's website. And there's a whole lot more. There are reports that SBF has been interviewed by law enforcement and that he's selling his multi-million-dollar Bahamian penthouse, for example. He's been sending cryptic tweets since Sunday night suggesting he's either been hacked or has lost his mind. And it all just goes to show that this saga is nowhere near over.